Hi, I'm Stuart. I'm going to give you a quick overview of U.S. equity investing. By way of background, I'm CEO of Mallow Street, a community of 3,500 key decision makers in the UK pension fund industry who collectively control more than $2 trillion of assets. Today, I'm going to talk about owning stocks. I'm going to focus on the United States and the unique characteristics of its stock market, discuss the risks involved with investing in stocks, both in general and in consideration with the American market, explain why I own stocks, and leave you with a few key principles every investor should always remember. The United States is the largest economy in the world and has been for the past 150 years. Its gross domestic product, a measure of the value of everything produced each year, is about 22 trillion US dollars. The US economy is supported by huge entrepreneurial spirit, underpinned by the US dollar. The largest 500 companies in the United States make just under half their money from overseas revenue, meaning they offer benefits of global diversification. They earn money from economies all over the world. I'll come on to diversification a bit more in a minute. Stocks are another name for equities. They're called equities because they represent ownership in companies. So when you own a stock, you own a piece of a company. There are stock markets all over the world, from New York, London, Paris, Tokyo, Shanghai, Hong Kong, Sydney, and countless cities in between. The US stock market is by far the biggest in the world, representing about 40% of the total value of all stocks in the world, and lists some of the most recognizable brand names. For example, Facebook, Amazon, Netflix, Google, Microsoft. Just take a moment and think about it. These companies have completely changed the way we shop, consume information, communicate, work, and ultimately live our lives. This is not just a feature of the products and services they offer, but also a result of the American entrepreneurial spirit. The American stock market gives a great opportunity to invest in the most innovative ideas and companies in the world. History tells us that in the past, the stock market has been a great place to invest and grow your money. Over the past 100 years, the long-term average return of stocks has been about 6 or 7%. However, past performance is no guarantee of what will happen in the future. Stocks go up and they go down, and you could lose money. To avoid this, there's a key point to understand: diversification. This means don't put all of your eggs in one basket. Rather than just investing in one company, you should spread your investment to include a number of companies. When it comes to investing in stocks, the younger you are, the more risk you can afford to take, and the greater proportion of your long-term savings can be in stocks. As you get older, it'll become necessary to reduce the number of stocks you own because you will want to keep the money you've made over the past 30 years in safer investments. So to summarize, I own stocks because I want my money to work just as hard as I do. I don't want to keep my money in cash, as inflation will erode the value of my savings over time. And I want to invest in innovative and creative companies that are global leaders in their respective fields and industries. Many of these companies are in the United States. So before you get started, there are a few things to remember. Investing today allows your money to work for you. This is not without risk. Diversification is key, and you must do your homework on the companies you're considering investing in. Take advantage of time. Start saving at a young age, make investing a habit, and add it to your routine. So that's a short overview of stocks in the US market. I'd think about it, and I think you'll be amazed at the outcome.